In this video, I'm going to show you exactly how the creators of a meme coin make money from it. And you're probably wondering, that's weird, Sajad. Well, why do we need to know that? We're just trading the coins. Well, it's really important you know how they make money from this as well, because then you can kind of understand how well a coin might do. You'll understand more how rugs and scams happen. You'll understand more as well if the coin's got longevity in future. How might that happen? Because the intentions of the creators of the coin are really important. And I'll show you why in just a minute. So let's use an example. Hypothetical. Let's say there's a new meme coin. And let's just call it coin with the $ ticker. And let's say there's 1 billion supply of this coin. And the creators of this coin, so there'll be a dev. Dev is short for developer. They're the ones who write the contract. Sometimes it's just the developer literally launching the coin. There's nobody else. Sometimes they have whole teams. There's somebody doing the marketing. There's somebody doing the social media side of things. And there's a developer. And there's moderators on their Telegram group. A moderator is just somebody who just engages people in the chat, replies to them, answers their questions, pins Twitter comments, stuff like that. So it could be a team or it could be literally just one person. A lot of these coins, believe it or not, are just one person launching. And the way they make their money is when they send this coin live, you have to remember it costs them money. So it can cost them anywhere up to, let's say, $1,000, roughly. And if they've got a lot of experience, it could be a little cheaper than that. But let's use round numbers. It's probably going to cost them about $1,000. And they need to get a return on their money. The same way when you invest and you trade in a meme coin and you spend $100 or $1,000, you want to get back more. You want to get back double. That's the point of this training program. So how do they make the money? First way, what they do is before they send the coin live, they keep some of the tokens. And I discussed this in other videos where obviously we've been talking about liquidity. But it's good to know from this perspective. So they keep, let's say, 200 million tokens. So that's 20% of the 1 billion. So they keep 20% of the supply. So what happens is the other 80% goes live and it starts trading. And what they do with this is they slowly sell. And whatever the price of the market cap, that's how much they might make. So if the market cap reaches 10,000, and let's say they sold all of them luckily at that exact time where it reached its maximum. Well, what's 20% of 10,000? It's 2,000. So they make 2,000 and they make double what they invested. That's one way they make money. Let's discuss other ways in which they make money. Now, this is assuming it's not a rug or a scam. It's a legitimate project and they're not trying to just pull liquidity or do anything else, which again, I discuss on other videos. The other way is tax. It's a buy tax and a sell tax. How that works is every time anybody buys or sells any part of this coin, they might charge 5% or 10%. Usually that gets paid back to them in the actual token or sometimes dollars, but usually the token. And then what they can do is they can sell the token or they just get that 5 or 10% per trade. So if somebody makes a trade and they buy $100 worth of Solana in this particular coin, $5 basically goes straight to the creator every time they buy. So if you think about it, it does add up over time. It kind of add up to a good bit. So they may end up making 2K total overall like this. Now, if they've set the contract in such a way that they can change the tax, they can keep this high at the beginning and then actually reduce it to 0% because people don't like to see high tax. The traders and people investing in meme coins don't like that. The coin doesn't usually do well. The ones that do well nearly always have 0% tax. That's one of the reasons people like that particular coin. So these are two of the most common ways in which they actually make money from this. And the top way, sometimes in marketing, you might see in their marketing spiel, what they say is they're withholding some tokens, these ones, for marketing. They literally say that. And their plan is to sell some of them so that they can spend it on some sort of advertising costs, like paying for soul trending and stuff like that, which again, we discuss later on in the trading program. So that's basically how it works. So that's the two main ways. So believe it or not, there isn't any kind of other way. Just by launching the coin, they don't automatically make money. And remember, they've lost money when they actually launch. Now, I'm talking, by the way, about 2K there. Let's say we got to 10K market cap. Remember, some of these coins can reach hundreds of thousands in market cap. So this figure here could be a lot higher. This could be a lot higher. And even the creators and the devs, they have no idea how well the coin might do. They're just hoping to ride on some trends, do something hopefully unique, even though a lot of them you see are not unique, and make some money. But what you might see a lot of are coins that are not very good at all, and you're probably wondering, like, why are they launching? You see the same thing again and again. For example, Pepe. There's a new Pepe every single day, or there's a new Reddit coin every single day. And you're like, why do they keep doing this? Well, the reason they do it and they quickly make a little bit of money and then just the coin just crashes is because they've worked out ways to be very efficient. So to get this cost down to like as little as $200. And then as long as they make $500 to 1K on the actual launch itself, that's enough for them to then just walk away. So the coin has a little pump for 10 minutes, 20 minutes, falls down, and that's the end of it. And that's enough for them. And they're happy, rather than trading, which is what I'm teaching you here, they're happy to just, they take all of that risk and do all of that work, getting the coin set up. And as for as little as 200, that's including website, marketing, everything, by the way, contract, everything. Little as $200, flip for 500 to 1,000, and then just walk away. So those are the main ways. I mean, this is not like comprehensive. There are technically other ways. So, for example, one of the other ones, a little bit more indirect, but it might be later on if the coin's doing well, they launch things related to the coin. They might launch NFTs. They might make a bot, like a trading bot, that people buy or do, they get some tax for, they get some fees, transaction fees for, much like BonkBot actually. Or, so NFTs, bot, what else? Maybe merch, maybe merchandise of some, t-shirts and cups or something with the picture of the token logo on, stuff like that. So that's obviously if they get a little bit bigger, maybe they'll do some brand deals as well. The list is endless. But hopefully that gives you an idea, like immediately. This is why when we're doing our scanning of contracts, we check to see how much the team are holding in terms of numbers of this 1 billion. Because we need to know how much they're holding. Because if they're holding too much, it's risky for us as investors because they could suddenly sell 20%. What do you think happens when a team suddenly sells 20% all at one time, suddenly in a collection? Well, the price goes down. It plummets rapidly. And it can fall easily 10, 15% or more. So that's why we kind of need to know this stuff. But yeah, like I said, not comprehensive, but these are some of the main ways that the creators and devs make money from the collection. Thanks for listening. In this training tutorial, we're going to discuss liquidity pools. Now, this gets easier once you get your head around it, so don't worry if this is making no sense for now. It's a good thing to know because it avoids you running into issues. And also, when people are randomly talking about things on Telegram, about what the dev did and this and that, it makes sense to you. You actually know what they're talking about. So let's use an example. So there's a very popular collection on Solana, and it's called Myro. It's one of the biggest collections. Myro the dog. Now, when they created this collection, they need to create it in such a way that you can buy and sell Myro tokens. So the token is called Myro, M-Y-R-O. So it could have a dollar sign in front of it. That just means it's a token. So you need a shop to buy Myro tokens. And in that shop, you need to be able to buy tokens. And then when you buy them, you're giving them money. And that money is Solana. So you're going to give them some Sol, and the shop is going to give you Myro. And then you're holding Myro. And then when you want to sell it, you come back to the shop, you give them Myro, and you get back some Solana. This shop is the liquidity pool. It's as simple as that, actually. So this is the liquidity pool, LP. It's also called Liquidity Pool LP. And it tends to be on a platform called Radium for Solana. Trader Joe, for example, for Avalanche, and sometimes it could be Uniswap for Ethereum, etc. You can have pools in different places. You can have different shops. So this is one shop. You can actually open another shop on Jupiter that does the same thing. And when collections get bigger, they open multiple shops. And in this shop, you're buying and selling Myro, and that's just another shop. But to make this shop in the first place, the creator at the beginning has to come to Radium. I'm showing you a basic way. It's kind of a little bit more complicated, but step by step. But basically what they're doing is they're coming to Radium and they're saying to Radium, hey, I've got all of these tokens, which I created when I made the contract. When they make the contract, these Myro tokens, let's say 1 billion of them, 1 billion, get sent to their wallet. So now their Phantom wallet is sitting there. It has a bit of Solana and stuff and a bit of other random crappy meme coins that they couldn't sell and Lord knows what else. But basically, they'll have 1 billion Myro tokens sitting in there. So they need to come to Radium. They need to come to this shop. And Radium will ask you, the platform that owns the shop. So basically, Radium is the mall. And there's loads of these little shops in there. So the mall will ask you, look, you want to open a shop. What tokens do you have? And how much Solana do you want to put with the tokens? So they will put 1 billion in here, and they will put, it could be any figure, but usually people go for around $1,000. $1,000 worth of SOL. So they put $1,000 worth of SOL. So they're basically putting Solana, which is about 10 Solana. So they're putting 10 SOL and 1 billion tokens into the pool. And then they click enter. And then the Radium tells them, your shop is live. And as soon as this pool is live, then there are Myro tokens now available to sell. The project has launched. And without doing anything, without doing any marketing at all, this will immediately start showing on Deck Screener and lots of other tools, and random bots and people will start buying without them doing anything or even having any social. Because some bots are just programmed to just buy any new collection and then see how it goes. And they make a lot of profit from that. And then the odd ones get rug pulled and stuff, but still overall they remain profitable. So some of them, without any due diligence, these bots just automatically buy any new collection. So the collection launches when the pool is live. As soon as the shop is open for business, as soon as the creator has put in the tokens and Solana, they buy. And the price that it is at the beginning is the price of Solana they put in. So the market cap will start, again, it's just easier to think about it this way, but this is approximately about 99.9% accurate. It will start with 1K. That is the starting market cap of this token because they deemed it so. They could even put 1 billion and put 10,000K. But you don't really need to do that many unless you have a lot of people interested in the collection already. Because the only problem, again, we're getting a bit off track here because we're not talking about trading here. We're almost talking about how to create a collection. But basically here for the 1,000, if you have loads of people who are interested, know about your project, it's very hyped all over socials and stuff like that, you don't want to start with 1,000 because what might happen is 1 or 2 people who know you're going to launch will come and just buy for 1,000. They'll buy all of the tokens and then the collection won't go anywhere because there's nobody else kind of buying or selling. Or they'll buy such a big amount that they'll own 30-40% of it and they'll become a very big holder, which is not good long term for your collection. But we're digressing. So basically, most of them with these stealth launches, and you've never heard of them, they'll put 1,000 in and they'll put the token in. That's it. That's what a liquidity pool is. Basically, opening a shop where you finally put your tokens in as a creator and you put some Solana in as well together, and then people see the new token as Myro/Sol because you put Solana in and Myro in, and the initial price will be whatever that initial money you put in divided by how many tokens you have. So it's 1,000 divided by a billion. You don't need to do the maths here, but it's basically 0.0000001 at a guess, something like that. And that's basically it. That will be the starting price. And then the price usually goes up a bit. And then depending on how the project's going, from there onwards, we'll see how it goes. So that's the liquidity pool. And in the next video, we're going to discuss exactly what the next step is after this. After they've created the liquidity pool, how do they lock the pool, burn the tokens? How do you rug sometimes with this? How do they do that? I'm going to discuss that in the next video. Thanks for listening. In the previous video, we discussed liquidity pools, and I gave you a very simple explanation. And for a lot of you, that would make sense. For a few of you, especially those who are newer to understanding meme coins, it still might not make complete sense. But again, not to worry. Go through the video a couple of times, and in this video, I'll clarify a few things as well. But we'll also go to the next step now. What this means when it comes to burning liquidity, stuff like that. So just a reminder, the creator puts in their new tokens into this shop. So what we're going to do is we're going to remove all of this and we're going to do a brand new example of another coin. So let's start that right now. So let's say we do another example. So this is Pepe. let's say they're going to launch a Pepe collection and they want to launch it on Solana. So the place they need to go with their Pepe tokens is Radium. So you create the contract first. So you create the contract that gives the creator in their own Phantom wallet 1 billion Pepe tokens. So they've got the billion Pepe tokens. Now where do they need to go? They need to go and make a pool. Nobody can buy this. How can somebody buy Pepe tokens if it's just sitting in someone's wallet? And that's all the tokens in the whole world of Pepe /Sol is sitting in some random person's wallet, like your Phantom wallet. You watching right now, it's in your wallet. So how is anybody going to buy it? They can't, can they? You need to put it in a shop somewhere so that they can buy it. So they go to the mall, which is Radium. So Radium is the mall. Call it Ray. And then in the shop, they need to open a new shop. Ask Radium, can I open a new shop, please? And can I put Pepe in here? And then I'll put 2K Solana with it. Because people have heard about my collection. I've got a few followers already, blah, blah, blah. I don't want somebody to just buy it all at the beginning. Which rarely happens, by the way. People are so nervous about all kinds of scams and stuff, especially at the beginning of a collection. They're usually the bots only buying $10 here, $5 here. Nobody's spending $500 on a brand new collection that just launched seconds ago. It's too risky. It's very, very rare that happens. And even if somebody did a bigger purchase, a lot of the bots and stuff, they sell within a few minutes because that's what they're programmed to do. So they're gone anyway. So nothing you have to lose sleep over. So you've opened your shop and now Radium have created the pool for you. Now Pepe is immediately live as soon as the liquidity pool LP goes live. Now, what does the creator get from this? So they've created this pool and they put money into this, but they can't make money from this collection. The only ways they can make money from this collection is if they're selling it for tax, which usually on Solana it tends to be 0% tax, or they hold some themselves. They held back some of these tokens for marketing, like 5% or something. So that would be like 50 million. And they can later sell them into the pool as the price goes up. Because if they sell them right now, they'll just get back for that 5%. They'll probably get back, what is that? We're talking $100. Yeah, $100. So 5%. So they'll just get back their $100. But if this goes to 200K market cap, they'll obviously get a lot more than that. They may get a return on their initial investment into this collection. But again, we're digressing. I'm just giving you a little flavor of how it works as from a creator perspective. So when they create this Radium pool, Radium sends them something. And this is a receipt. They send them a receipt. And on that receipt, it gives them an LPT, liquidity pool token. It's a special receipt token. It's just called a token, but basically it's just a receipt that the creator here gets to keep. So in his wallet right now, he had 1 billion of Pepe. He had 2K of Solana. Those have both gone now. Those have gone. So he doesn't have the tokens anymore, unless he kept some back from marketing. Let's assume he didn't. He's just making it purely community driven. Maybe he'll buy into the collection or something. Who knows? Those are all gone now. But the one thing that is in his wallet is the LPT, the receipt. He has the receipt. Now, technically speaking, if he wanted to, at any time, if the liquidity is not locked or burned, he can go back to Radium with his receipt and he can say, hey, I want my money back. So it's like buying a cardigan or some clothing at Walmart or wherever, Target or wherever, and then taking a receipt and then returning it. You say, I don't want it anymore. I want to return it. And they can do this at any time. So when they do this and they return back those LPTs, they get back the cash that they initially invested. Sometimes more, sometimes less. Again, we're not going to digress and go into that in this particular video because we don't need to. They get money back. So then this will be gone. So all of these will be gone. And then he'll get back money, tokens, but usually just cash in Solana back. And that's basically a form of rug pull, almost. And again, I don't want to get into all of the different terms and stuff like that because you don't need to worry about that. But there's terms like rug pulls alone or there's honeypots and stuff like that. But basically, they're pulling the liquidity. Now, the problem as an investor in this collection is you're here, you're the investor, and you're buying and selling this token. So you've got loads and loads of these Pepe tokens. But if somebody's taken away the pool, there's nowhere to sell your Pepe. You have Pepe, you have 1 million of them. Where are you going to sell? There's no pool left anymore. There's no pool to buy and sell your tokens. So you can't do anything. I mean, you can take this Pepe alone and you can go make a new pool, but you'd have to exchange money for it anyway. So there's no kind of help there. So you can't get your cash back for it because there is no shop. The shop's closed. It's closed. There's no shop now where you can get your money back. That's a problem. And this happens very commonly with collections, especially in the first kind of few seconds to few minutes. And some of these creators, bless them, they're just happy to make a little £100 flip by doing these type of rug pulls. So that's what they do. Some of them launch many times a day and just do this. It's just the way it is. So you have to watch out for this kind of stuff. And because there's no shop now, remember, you can't do anything with your Pepe, so it's gone. It's literally, the value of this is zero now. Move on to the next collection. If this has happened to you, that's life. Get on with it, deal with it. That's why you should only, in these new collections, if you don't know what you're doing, you only invest small amounts, etc., which obviously I discussed in a separate video when we talk about trade sizing. Now, how can we avoid this, or what can be different in this situation that will help the situation? Very simple. If they lock the liquidity pool or they burn the tokens. So when they lock the pool, sorry, it's getting a little bit messy, but basically, I need this all here so it illustrates the point. When they lock it, what they're basically saying is they open this shop, and what the creator is saying is, I will lock this. I'll put a lock on the padlock on the door, but that's a padlock to prevent him or her as the creator getting back those tokens and taking the receipt back. So lock basically means no refunds for 30 days. The opposite of when you buy a cardigan or something, where usually when you're buying clothing, you get 30 days to refund and then you don't afterwards. This is the opposite. You get no refunds for 30 days. So that means for 30 days, they can't pull the pool. So people can trade, they can buy, they sell, do whatever they want to, knowing that it's locked and it's safe. Well, for 30 days anyway. And you're never going to hold a meme token for more than 30 days. Extremely rare. So we don't know what the lock period is. The creator can confirm that in all of the socials, or you can go start looking through contracts and actually checking this information on Radium, etc. But again, we won't get into that. But basically, you'll see a lock sign, and they can lock some of the tokens or all of the tokens. This is the other problem. So all of the tokens in it, all 1 billion, they can lock all of them, or they can lock 0.01 of the supply. So be careful. Just because it's a lock sign doesn't mean anything. If they've only locked a tiny bit, that means you have a tiny small shop that you can sell into, but they've refunded the rest. So that small shop, you're not going to be able to sell your Pepe in. It's just too small. So be careful about that. But the best scenario is when they burn it. They literally take that receipt and they burn it into flames. This receipt here is gone. That's the best scenario. And that's where you get that green circle around on Deck Screener, and some other tools will show it as well. Or the creator will actually, the dev will show you the receipt for the burning in their socials. They'll even put on their website and messaging, we're planning to burn the tokens immediately. Now you have to create the pool first. You can't do it immediately. You can't do it before you launch. But literally a few minutes after launch, or even seconds, you can burn them. It's a few clicks of a button to burn. So they should be able to do that. And if they haven't, you need to find out why, because why would they not want to burn it? Kind of suspicious. So I prefer generally, especially if you're new, only trading collections that have locked and burned the liquidity tokens. So if the receipt is burned, there's no way they can go back to the mall and say, I want my money back for that shop I opened. I don't want the shop anymore. Close down the shop. Give me back my refund for my initial deposit for the shop. They can't do that anymore. That's called burning the liquidity token. So when you say liquidity has been burned, you see that all the time in all these collections. That's what it means. But just because they say it is one thing, whether they do it is another. Generally, they do if they've said it. Like it's a little bit more rare. But again, there's a lot of scams out there. You have to be careful. So always look for the green circle around the lock sign, or check their contract addresses as well. And I'll show you all about contracts in a separate video. Obviously, we'll go through that. But you don't want to waste too much time on that. If it basically shows on the platforms that it's locked and burnt, they pick up on that anyway automatically. They screen for that automatically, so you don't need to worry. You can go ahead and buy and sell the collection. Now, this doesn't mean that the collection price is going to go up and down. What it means is that initial 2K is never going to go below that, because that's burnt now. That's the absolute minimum. And you can't suddenly lose all of your money. Yes, you can lose a good bit of your money if the price you bought really high and it goes down. But it'll never be zero because there's no way it can be. This forever will be locked, these Pepe tokens. And it's even 6 months from now, this Pepe token could rocket, even if it's sitting at 3K market cap for months, years, days, doesn't matter. Because it's completely safe now. There's nothing anybody could do to scam here as such. Now you can buy and sell and pump and dump the price, but you can't really scam in any way once it's locked. It's a very important video, this. So if you need to, this video and the previous one, just go through it one more time. But as you invest in most collections and as you read posts about burning and not burning and locking and not locking, it will all make a lot more sense. So don't stress. As you start trading regularly, this will all make sense. In this video, I'm going to talk about a few of the most common issues you'll run into with brand new projects. And in particular, rug pulls, how they happen, what the hell a rug pull actually is, why suddenly everything can go to zero within minutes of a new launch. So you fully understand it and then you know how to avoid it. You're never going to be 100,000,000% sure about these things, but with these basic tips, you're very, very likely to avoid it. Now here, I'm on new collections again. We're always on deck screener here looking at new collections and you can see loads launching. First of all, just visually, when you look through some of these names, you already know what's rubbish. You see /Sol, Discord, Instagram. These are just random names of platforms. How can that even be a meme coin? That's obviously not a meme coin. So don't even get involved in these. Very likely these are going to be problematic. Obviously we can start checking on the chart and I'll show you some other tips. But just as a general first point, once you get more experience, you already know what's a complete waste of time. So just avoid those, or any that are clearly just a direct rip-off word for word of a famous meme coin. It's just like Miro, M-I-R-O. It's already a famous meme coin and it's just a clear rip-off. So just avoid stuff like that. Don't waste your time with stuff like that. So that's the first step. Next one, I'm going to show you a couple of these that were almost like rug pulls. So for example, this one. This was newer. It just launched not long ago. And you can see the liquidity is drained and now it's showing us no liquidity and stuff like that. So what actually happened here? That's what I'm going to explain to you now and how it works with the initial pools. In a previous video, I explained the liquidity pool. So here, basically, what's happening is after the pool is set up, if the creator doesn't lock the tokens or burn the tokens, what they can do at any time is exchange all of the tokens in the pool back and get that cash back. And if that cash value has gone up a little bit, they can just suddenly take it back. And that's why you see these sudden things where people have been buying small amounts because probably just to build up the pool and look like it's got trading volume. So the creator of this project is probably doing that and then suddenly nobody can sell. You can see sell 0.01, remove. So suddenly people are unable to sell now. Here they were still able to sell a little bit, but suddenly the rug got pulled. So they pull the liquidity. And when you pull the liquidity, you can't exchange your tokens anywhere because there is no pool where there are tokens and Solana money remaining in the pool. So where are you going to exchange it? So suddenly there's nothing you can do. So this is literally one of those that quote unquote goes to zero. So what do you do? How do you avoid this? Well, a few different ways. And we can get very granular with this. Like we can start looking through contracts and stuff like that. But a lot of the time you don't need to do that. You can check here. So basically, this is after it's drained, so ignore this lock sign and stuff like that. But basically, a collection that's already well established. This was another one that is the same thing, by the way. So suddenly they pulled all of the liquidity out and then nobody can sell anymore. Whereas before that, everything was going okay, but they were basically more than likely using wallets to buy up their own collection just to get the market cap to go up a little bit before they pull the liquidity. So the liquidity probably got to $3,000, something like that, and then they just pulled it. So let's just go back into new pairs and let's just show you an established collection to see what it looks like on here. So let's click on this one. This collection is doing well at the moment. It's at 450 market cap upwards. Notice liquidity is locked. So there's a lock sign here and it's green around. So if you hover over that and click on it, it shows you total locked liquidity. 99.9 basically is 100%. Consider it 100%. And it's been burnt as well. So you see that? Locked and burnt. So what that means is they locked it, which means they're not allowed to exchange those tokens, maybe for a period of time. But then when they burn it, that means they can never, ever take that cash out of the liquidity pool. So forever now, it doesn't matter if the dev leaves this project or doesn't, whatever he wants to do. This is a community world token that will go up and down based on whether people buy it or sell it. Nobody can ever pull a rug on this because there's nothing to pull because the liquidity is burnt. There are no LP tokens anymore. It's literally just buying and selling. And actually a random community member can start pumping this and marketing it on their own if they want to. They can make their Twitter account and talk about 4chan and the price might go up or might go down. He's not doing anything weird. He can't secretly buy any extra tokens that weren't already listed and sold. That's why you get so many community takeovers, which I'll discuss in a separate video. So it's that locked icon you're looking for. It makes things very safe. Now, sometimes you don't get the green around it. You just get the gray. That's why you have to be a little bit careful, but still a little bit of locked is better than nothing. But sometimes people trick by locking only a tiny bit of the tokens and then the rest are not locked. So you have to be careful. That's why this shows the percentage and you can check. The only problem with Dex Screener, obviously, is, there are delays with this information. It takes a little bit of time. So let's click on another one. This is a newer collection. But look, it's locked. It's a new collection, very low market cap, but locked and burnt. Much, much safer. Doesn't mean, the price is not going to trend down if they don't do marketing or if they don't get the buzz and stuff like that, but much, much safer. And then also the other place to check is on their Twitter, Telegram. Not usually on the website, but on the Twitter and Telegram, they will literally say, blah, 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 look, things are locked now, and make a actual posting about that. So they're just talking about some of their trending areas at the moment and stuff. So probably, they didn't even do that. They missed a bit of a trick there. But basically, they've got their contract site. They should have just said here somewhere. Did they say it? No, they're just saying they've paid for extra promotions and listings. They didn't really say. So I don't know what they're doing here. But remember, so for some of these people, English is not even their first language for some of these developers and creators and stuff. So they just write gobbledygook and you have to kind of differentiate from that and try and work out what they're trying to say. Let's have a look. How is this one doing? Yeah, this one had a big pump and it's been struggling since, which again is, as you'll see from my videos, is normal for most averagey type collections. But the main thing is they can't suddenly pull anything. They can stop marketing and stop trying, and if they had any marketing tokens, they can sell some of those. But that doesn't mean it's going to go to zero. The zero ones, the rug pulls, are the ones with the liquidity, especially on Solana. The liquidity is not locked and not burnt. So that's what you're looking out for. That's the most common one. And in other videos, we're going to obviously talk about some of the other things that happen, a lot of the reasons why you get this massive pumps and dumps. But we'll leave that for another video. Thanks for listening. In this video, we're going to discuss slippage, slightly more complicated topic. I'm going to try and simplify it as much as I can. So when we're trading meme coins, let's say we have a meme coin that's trading at the moment. Let's call it FED, the Fed, because this tends to be a very common ticker for meme coins. Every week I see another Fed launch. So basically, as the price goes up and down, you have these price movements. And these are exact. This is an exact tick chart. So the exact price that a trade took place. So let's say this was a price of 2 Sol. This was 4. This was 10. Back to 6, and so on and so forth. So these are the prices where transactions are happening. So let's say you want to buy into it, and the price at the moment is down here. It's 5 Sol. And this is the last price you saw, and you want to buy in to this particular meme coin, and you're ready to buy. The problem with meme coins are, especially early on, where there's less liquidity and there's bigger transactions compared to the whole pool, that there's a lot of price volatility. So within a few seconds, so let's say this is just 30 seconds, within 30 seconds, you can get the price go up and down 10% or more. And because of the time delay of your transaction actually going through, you don't know what price you're going to get. By the time the price is going through, it might be 7, it might be 3. How do you know what price you're going to get? And that's why there's this concept of slippage. And front-running slippage is a way some bots, people running bots, actually make a lot of money from this. So basically, if you set your slippage tolerance very low, when the price is 5, what you're saying is, if the price is 5.2 or 4.8, I'm okay with that. Still put the trade through. That's no problem for me. So what is that as a percentage? Doing a little bit of maths here. So let's call it, I don't know, like 1% would be 0.05. So about 4%, something like that. So it's like 4% slippage tolerance. But what that means is if the price gets to 5.3 or 4.7, then your transaction won't go through. But if you set a higher slippage tolerance, then if the price goes a little bit higher or a little bit lower than that, your trade will still go through. Sometimes if you just want your trade to go through and you don't care, you don't mind setting up a higher slippage tolerance. Both ways. You can set it up at 10%. That means that even if the price goes to 5.5 or 4.5, you want to sell, you want to get out of position, you've had enough, then you can do that. Especially if your transaction keeps failing because your slippage is too low. And sometimes that's the reason it's failing. Your slippage is too low. So let's discuss an example. How might everything fail? Same example again. The price is 5. You set your slippage really tight at 0.05%. What that means is if the price is 5, then your transaction will only go through if it's 5.09 or 4.91, something like that. So it's very, very close to this price. But what if the price is yo-yoing and it's miles out of this? It drops then to 4.7. And then from 4.7, you keep your slippage the same and you try and do the transaction again. So that means if it goes to 4.8 or 4.6, it will buy. But if the price moves further than that, the transaction will fail. And what happens is your transaction just keeps failing because you can't nail the exact price because it's moving much faster than your slippage tolerance allows. So like I said, it's a little bit more complicated, but once you get it, it will make complete sense. So in a simpler way, you're setting stuff up so tight in terms of what price you're allowing your bot or your wallet to buy at. It's so tight that the price is moving so fast, you're not catching the price where you want it to be. You need to be more lenient, a little bit more flexible. And that's where we talk about changing your slippage tolerance. So let's use some examples. This is Trader Joe. I showed you before and we found some random coin called GEGs. Now with this, I've got a slippage tolerance here of 3%. If I click on this, I can change this. The default is 0.1 and 0.05. Low slippage tolerance, V2, normal slippage tolerance is usually the top one you need to worry about. And what you can do here, you've got a transaction deadline as well. So it will keep trying for a long period of time. You don't need to worry about this. There's a default here, but usually your transaction will just fail straight away if it doesn't go through. So I don't usually mess with that. Now, if I find my transactions aren't going through and prices moving too quickly, up or down, whichever way, I usually increase this. So I might move this up to 4 or 5%. Now, this does mean that potentially I will pay 5% above what the price is. And it even warns you here your transaction may be front run, which we'll discuss in a minute. But to get your transaction to go through, sometimes you have to do that. And remember, we're discussing meme coins here where price could go down 50%. It could go up 300%. So actually 2, 3, 4% is not the end of the world if you want your trade to go through. And if price is going up very, very quickly, because a coin is just very popular right now, it's not going to take your transaction if you set your slippage too low. So let me illustrate that to you. So basically, let's say price is pumping and is going up very, very, very quickly. So it's at 5 here, and then within a few seconds, 6, 7, 8, literally within seconds. So if you set your slippage at 0.05, the price is already moved by the time you try and do your transaction. It's not going to catch that price. And then so on and so forth. So your transaction is never going to go through and you're going to miss the entire pump. Don't want that. You want it to go through. So you're willing to take a little bit of a risk and go with 3, 4, 5% slippage just to make sure your trade goes through and you get on this. And so what if you pay 5.05 rather than 5 if you can see it pumping? Because once it gets to 6, you've already made 20%. So what if you paid 5% on slippage? I hope you see my point. Sorry, even this here, 5% is not 5.05. Sorry, it's 5.25. So you're paying 5.25 basically with the 5% slippage. But if it goes to 6, you've made 20%. If it goes to 10, you've made 100%. So it's well worth the extra little bit of slippage that you might lose out on. So this works both ways. If price is going up very quickly or down very quickly, that's where you'll use slippage to your advantage. That's how it works basically with slippage. Let's get back onto the trading platform. It's the same with Radium. So here with Radium, if I click on more information at the bottom, and then here you can see slippage tolerance. So if you hover over here, it will explain to you maximum difference between your estimated price and execution price, which is basically, estimated price is actually what the price kind of is right now. That is the actual price, 5. And your execution price is the 5.25. And you can see default is 0.05. And you might want to increase this to 0.5 or even something much higher like 2 or 3%. So sometimes that's what you need to do to get the transaction to go through, or otherwise it doesn't go through. Now, what's all this front running business about? Well, basically that I will discuss in the next video, because that's a whole topic. And actually, believe it or not, there is a way to make actually a lot of money if you're if you're a developer and you're into bots and stuff like that. It's a great way to make cash as well. I don't spend too much time on stuff like that, but I do find the whole topic quite interesting. So we'll discuss that in the next one. Thanks for listening. In this video, we're going to discuss getting front run with your trades. We're not going to spend too much time on it because, again, it's not something you need to dwell on or worry about. You just need to basically understand the concept and understand what warnings you might see on some of these platforms. Using same example. So the price right now is 5 sol and we're looking to buy. Let's say we're an idiot when it comes to meme coins. We're somebody completely new. We have no clue. We didn't watch Sajad's training at all. And our transaction is not going through, so we mess about with this slippage thing we've never heard of before, and we set it at 20% because why not? And believe me, this does happen. I've seen famous trades where people have been front run for literally millions. No joke. So this is how it works. Let's say we set it at 20%. What that basically means is that if this price is 5 right now, I'm willing to pay 6 for it. I'm willing to pay 20% more. It's a slippage tolerance. So I'm willing to pay 6 Solana for something that costs 5 at the moment. The market value is 5. Now, some smart people out there, not that smart nowadays because a lot of people are doing it. What they do is they use bots to front run. So before your transaction is going through, they will buy that exact amount almost to sell to you. That's the way I think about it anyway. They're almost like a middleman here. So they will jump in here and they will get it at a much lower slippage tolerance. And what they will do is immediately sell afterwards. So how it works is, with these bots, this middleman situation, they will purchase this at a much better price because they know what they're doing. And the transaction speeds are literally lightning fast with the software they're using. So they might buy it for 5.02 or 5.03 live, as your transaction with 20% slippage is now going through. And because you're happy to pay 20%, they'll buy, especially if this is a massive trade, and you might be looking to buy, like $5,000 worth of this particular coin, for example. So let's say, as an example, 500 sol or $5,000, which is roughly about 500 sol. So they will buy that. They will literally buy that, use their bot, and they'll spend their money and buy that. All the while knowing that they'll then sell to you. That's almost how I see it. And what they do is they make a difference within seconds on that trade of 0.18. And that difference is on that whole amount of 5,000. And that's a lot of money because even if you look at this is nearly $1,000. Let's call it $900. I mean, this is a far off example. Usually most transactions are smaller. But the thing is, these bots they use, sometimes called MEV bots, MEV bots, they will run 24/7 throughout the day on some of these collections, constantly looking for these little arbitrage opportunities where they can make money from just people with ridiculously high slippage tolerances and then selling to you. Now, there is a risk for them as well. There are some risks, and I'm not going to go into that because that's, again, well beyond the scope of this training. You don't need to worry about that. If you're fascinated about this, obviously you can look into it more. And it's not that difficult to make these bots, actually. And some people make hundreds of thousands, if not millions, all day long, just running these bots. So they don't care what's happening with meme coin prices and stuff. They just care about crazy purchases people make with very high slippage tolerance, not knowing what they're doing when it comes to meme coins. And the thing is, it's actually the whales that are the biggest opportunity here, because when you see a meme coin pumping and you're like, I've got 20,000 spend money and I don't really care and I just want to throw it on some random meme coin to see what happens because I've heard about it in the news or on YouTube. they'll just randomly on one transaction try and buy for 20,000. Now, those of you who have a bit more experience, you will know already 20,000 on a meme coin that's at 5 at the moment, 20k is too much. You need to split up your order. It will impact the price too much. It will push the price up too much. And you'll need a higher slippage tolerance. That might be more than the entire liquidity pool. Better split this into $500 purchases or less. But these people don't think that way, and they don't know that, and they're wondering why their 20,000 transactions not going through. So they start messing about with their slippage tolerance, and then suddenly it does go through at high slippage, but an MEV bot made all of the difference. The price is pushed up, so instead of 5, they end up paying 8 or something ridiculous, and then someone's front run them. Front run basically means get ahead of the queue, just be faster than them, and then make money on the difference. Because they know, they understand that this 20k is going to push that price up stupendously, like a lot. But they get ahead of that, and then they quickly sell as the price goes up. So this person is almost left at an immediate loss sometimes. But again, this is going way beyond the scope here. But this gives you a little bit of an idea of how things work and a whole new niche within meme coins. There's a niche, obviously, of people buying meme coins, just general retail. There's a niche of meme coins where you're sniping, like I will do as well in wave 1 moves. There's more medium and longer term strategies, which I talk about as well, which is for well-established meme coins, which make good flips as well. There's creating your own meme coin collection, which can obviously make you money. And there's arbitrage opportunities like MEV bots. It's a whole kind of, how would you describe it, an ecosystem of meme coins. So it is an amazing area where there's lots of opportunities to actually make money, and a lot of the time make money quickly as long as there's liquidity. So this is a whole area. If you're interested in this, it's MEV bots, and you can look at that. But in terms of trading and sniping, just understand slippage tolerance and just be careful with it, and check your settings, especially if you're using a bot. Make sure your settings are exactly what you need it to be. I'll discuss some of my settings when it comes to sniping bots in a different video. Thanks for listening.